The first time I saw my trading account evaporate before my eyes, I didn't scream. I just stared at the screen, frozen, as numbers turned into ghosts of what used to be money. It wasn't the loss itself that broke me. It was the realization that I never really understood the game I was playing. They say trading is a battle between bulls and bears. That's not true. It's a battle between the informed and the emotional. And back then, I was on the wrong side. Over the next 15 years, I would witness three great market crashes, each one like an earthquake that rewrote the map of finance. The 2008 global financial crisis, the 2020 pandemic crash, and the 2022 crypto collapse. Each time, I lost something. Money, pride, friends, even faith. But I also gained something rarer, the ability to see through the chaos, not as a victim of the market, but as a student of its rhythm. I've watched liquidity die in minutes. I've seen so-called safe assets implode overnight. I've heard traders laugh in the morning and disappear by sunset. And through it all, one question haunted me. Why do some people survive, even thrive, when everyone else gets crushed? That question became my obsession. And the answers I found changed everything. Because here's the truth that no one tells you. The market isn't just a system of numbers and charts. It's a mirror, reflecting human greed, fear, and arrogance in real time. Once you understand that, you stop trying to predict it and start learning how to dance with it. Tonight, I'm going to take you inside my journey, the real story of what it means to survive three market collapses and come out stronger each time. I started trading in 2007, young, ambitious, and stupidly confident. I had just left a stable job in finance because I thought I'd found the shortcut to freedom. The market was booming. The S&P was hitting record highs. The housing market looked unstoppable. Everywhere I looked, someone was making money. So I did what every dreamer does. I dove in head first. I read a few books on technical analysis, opened a brokerage account, and convinced myself that I could beat Wall Street with a moving average and a dream. Back then, my apartment was small, my computer old, and my ego massive. I remember sitting there at 2 a.m. with CNBC humming in the background, watching green candles rise on the screen. Every time I made a winning trade, I felt like a genius. Every time I lost, I doubled down, telling myself I just needed one more good trade to make it all back. You probably know how that story ends. When 2008 came, I didn't just lose trades, I lost my foundation. The global financial system cracked open, and everything I thought I knew about the market, risk, value, logic, vanished. Banks failed. Funds collapsed, liquidity dried up, and retail traders like me, we were the last to know. I remember that September morning when Lehman Brothers filed for bankruptcy. The market opened with chaos. The spreads widened. My stop losses slipped. In 1 week, I lost nearly everything I had built over 2 years. It wasn't just the money, it was the betrayal. I had followed the news, listened to analysts, trusted the experts, yet none of them saw it coming. Or maybe they did and just didn't say it. That's when the first seed of doubt was planted in me. Maybe the market wasn't what it seemed. Maybe the real game was being played behind the charts, not on them. Maybe the ones moving prices weren't the traders I saw on TV, but the ones I'd never see at all. I didn't know it yet, but that first crash, that baptism of fire,
would become the foundation of everything I learned later. It would teach me that the market doesn't reward intelligence, it rewards awareness. And I was still blind.
After the crash of 2008, I didn't quit, though I probably should have. What I did instead was worse. I tried to get it all back. See, losing money in trading hurts, but losing your identity as the guy who was good at this, that cuts even deeper. I didn't want to be another failed trader, so I doubled down. I started day trading volatile small caps, penny stocks, anything that moved fast enough to make me forget how much I'd lost. And for a few months, it worked. I caught a few lucky runs, made back a fraction of my losses, and convinced myself I was learning. But the truth? I wasn't learning. I was gambling with technical analysis as my excuse. My routine became toxic. I'd wake up at 4:30 a.m., scan pre-market gainers, scroll through Twitter for rumors, and jump in before the bell even rang. I'd watch green candles spike and then crash just as fast. And every time I got caught holding the bag, I told myself the same lie. Next time, I'll be smarter. But next time never came. By 2010, I was deep in a cycle of revenge trading. I'd blow up a small account, take a break, then come back with a new strategy. MACD, Fibonacci, Elliott waves, whatever promised control in a market built on chaos. It was like trying to predict the weather with a compass. And then came my biggest mistake, one that still burns when I think about it. I borrowed money. Not from a broker, but from a friend, someone who believed in me. I told him I had a high-confidence setup and that the market was about to turn. He trusted me. I trusted the charts. 2 weeks later, that trade was gone, along with our friendship. That was the first time I realized how dangerous ego can be in trading. Not greed, not fear, ego. Because ego whispers, you can't lose again. It tells you that your last mistake was just bad luck. It makes you think you're smarter than randomness. And that's when the market humbles you. I hit rock bottom in 2011. Not financially, emotionally. I wasn't just broke, I was empty. Trading had consumed every part of me: time, energy, relationships, peace of mind. I remember staring at my charts one night, realizing I didn't even enjoy it anymore. I wasn't trading to win, I was trading to prove I wasn't a failure. That night, I shut everything down. Charts, news feeds, broker platform, and I walked away. For the first time in years, I let the silence sit. No blinking candlesticks, no alerts, just stillness. And in that silence, something shifted. I understood that the market doesn't destroy you, your attachment to it does. The moment you start defining your worth by your wins and losses, you've already lost the game. It took me months to come back. But when I did, I wasn't chasing profits anymore. I was chasing understanding. Because before you can win consistently, you have to survive. And before you can survive, you have to face the truth about yourself. That was my first real turning point, the moment I stopped trying to beat the market and started learning from it. The turning point didn't happen overnight. It wasn't one trade, one book, or one magical realization that changed everything. It was a slow, painful reconstruction of who I was, both as a trader and as a person. When I stepped away from trading in 2011, I did something I hadn't done in years. I listened. Not to market gurus or indicators, but to traders who had actually survived. Guys who'd been through Black Monday, the dot-com bust, the subprime collapse, and were still standing. One of them told me something that stuck. You can't control the market. You can only control how long you survive in it.
That sentence became my compass. I started studying the markets from a completely different perspective, not to find setups, but to understand why price moves the way it does. That's when I stumbled into the world of smart money concepts, liquidity theory, and institutional order flow, the kind of frameworks that strip away retail illusions and show you how the game is actually played. For the first time, it made sense why I had lost before. I wasn't unlucky, I was playing the wrong game. Retail traders, like I used to be, were trained to chase breakouts, trade indicators, and react to price. But institutions? They create those moves. They need retail traders to believe in breakouts so they can unload positions. They want stop losses clustered in predictable zones because that's their liquidity. Once I saw that, it felt like someone had turned on the lights in a dark room. I began to rebuild from the ground up. No indicators, no signal services, just structure, liquidity, and human behavior. I backtested manually, candle by candle, week by week, for nearly 2 years. It was brutal, but it trained my eyes to see what most traders overlook, the intent behind price movement. That's also when I developed my new rule, one that has guided every trade since. Never predict, only prepare. Trading stopped being a guessing game and became an exercise in probability and patience. Instead of asking, where will price go? I started asking, who needs to get trapped before it goes there? It's a subtle shift, but it changed everything. The more I learned about market psychology, the more I realized trading wasn't about charts, it was about behavioral patterns. The same greed and fear that wrecked me were visible in every candle. I could see my old self reflected in the market's movements, chasing, hoping, panicking. And once you recognize that, trading becomes less about profit and more about mastery. By 2015, I was finally consistent. Not rich, not flashy, but stable. I could take losses without emotional collapse. I could sit out days without FOMO eating me alive. And I understood something that most traders never do. Winning in the market isn't about finding a holy grail strategy. It's about surviving long enough to realize you are the system. That realization was the true turning point of my career. It's the reason I'm still here after 15 years, and the reason I can sit through storms without flinching. Because I stopped seeing crashes as threats. I started seeing them as the purest test of conviction, preparation, and mindset. Every bear market, every panic, every crash since then has only reinforced that truth.
I still remember the smell of that winter. Stale coffee, cold monitors, and fear. It was 2008, and the air on the trading floor was thick with tension. You could feel it before you even looked at the charts. The S&P 500 had been bleeding for months. Banks were falling one by one, and every news headline screamed collapse. Back then, I was still trying to figure it out. I'd just recovered from the dot-com trauma, thought I had finally learned something, and was overconfident in my new system. I was trading bank stocks because they were cheap now, I told myself. The logic was classic retail thinking. They've already fallen so much, they can't go any lower. But of course, they did. Within weeks, my portfolio was a graveyard. Lehman Brothers disappeared overnight. AIG was melting. Goldman Sachs was on life support. And me? I was frozen, staring at the screen, unable to click sell. It wasn't just money that vanished. It was belief. Belief that the system worked. Belief that the rules I thought governed the market meant anything. That's when I learned my first real lesson. Liquidity is oxygen. When the air runs out, everyone, from retail traders to billion-dollar funds, gasps for breath. I saw professional traders I respected completely lose composure. I watched mentors break every rule they had preached. People weren't trading anymore. They were surviving. But amid the chaos, I noticed something, a pattern that would shape how I trade forever. The crash didn't happen in one straight line. It came in waves. Panic, brief recovery, false hope, deeper collapse. Every wave killed off a new group of traders who thought the bottom is in. Every bounce lured in those who couldn't stand missing out. And at the bottom of those waves, when the headlines were darkest and everyone was dumping everything, smart money started buying, quietly, patiently, without emotion. That's when I started studying how institutional traders think. They weren't trying to predict where the market would go. They were waiting for everyone else to give up. When the market hit its lowest point in March 2009, I didn't buy. I wasn't ready yet. But I watched. I took notes, and I learned. I realized that what looked like chaos was actually a cycle of transfer from weak hands to strong ones. That lesson became my foundation. Every crash is a transfer of wealth from the impatient to the prepared. I didn't make money in that crash. I survived it. Barely. But that survival, staying solvent, staying in the game, gave me the chance to learn what truly mattered. When the recovery came, I promised myself one thing. Next time, I wouldn't just watch it happen. I'd understand it while it unfolded. That promise led me into the next decade, into the rise of crypto, the flash crash, and the chaos of digital assets that would test me in entirely new ways.
If 2008 was the storm that broke the old financial system, then crypto was the new religion that promised salvation. When Bitcoin first crossed the $1,000, I wasn't impressed. I'd seen bubbles before, tulip mania, .com, housing, but when it crossed $10,000, I realized this wasn't just another fad. Something deeper was happening. For the first time, finance had become cultural. Crypto wasn't about markets. It was about identity. People didn't say, I trade Bitcoin. They said, I am Bitcoin. That level of conviction was intoxicating and dangerous. I joined the wave, cautiously at first. I traded Bitcoin, Ethereum, and later altcoins. But what fascinated me wasn't the price, it was the psychology. The same herd patterns I saw in 2008 were here again, just faster, louder, and without regulation. Every bull run has its priests, and every market needs a myth. In this one, the myth's name was Sam Bankman-Fried. SBF was the golden boy of Finance 2.0, a nerd genius who claimed to trade billions while driving a Toyota Corolla. He spoke the language of effective altruism, preached ethics, and wore t-shirts instead of suits. He was the anti-Wall Street hero, and we all wanted to believe in him. When FTX rose, it felt like the birth of a new era. I used their platform. It was clean, fast, professional. Institutions trusted it. Retail traders worshipped it. Everyone thought, this time it's different. But markets have a way of punishing arrogance. By late 2022, the cracks began to show. Whispers about liquidity, rumors about Alameda, still, no one wanted to believe it. I remember the morning it happened, November 2022. FTX halted withdrawals, and in hours, billions of dollars were frozen. I sat there, deja vu flooding back from 2008. Different players, same story. When you remove the tech, the tokens, and the jargon, what remained was leverage, greed, and misplaced trust. People ask me, how could this happen again? It didn't happen again. It never stopped happening. It's the same psychology repeating, greed disguised as innovation. I didn't lose money in FTX, not directly, but I lost faith, again, in how easily people forget. Traders I respected have seven-figure balances there. Friends of mine watched their savings evaporate overnight. And yet, I wasn't shocked. Because the more I studied markets, the clearer it became. Every boom is built on the illusion that someone smarter is in control. The FTX collapse wasn't a crypto story. It was a human story. The story of how intelligence, when mixed with ego, becomes blindness. I started dissecting the event like a post-mortem. FTX wasn't destroyed by hackers or regulators. It was destroyed by trust misallocated. People outsourced their judgment to someone who looked smarter than them. That's when I developed one of my core trading principles. Never confuse transparency with trust. Crypto had given power back to the individual, but the irony was brutal. We handed it right back to centralized exchanges. We built castles on sand and called it decentralization. As the dust settled, I realized something profound. FTX wasn't the end of crypto. It was the beginning of its maturity. True systems are tested through collapse. Only what survives the crash deserves to exist. So I adapted again. I moved from chasing hype to studying structure. On-chain analysis, smart money flows, liquidity sweeps, the same logic that ruled Wall Street now ruled blockchain. The technology changed, but human emotion never did. That's the paradox of markets. Innovation evolves, but psychology repeats. And those who survive learn to profit from that repetition.
It was May 6, 2010, a day that would later be called the Flash Crash. The Dow plunged almost 1,000 points in minutes, erasing nearly $1 trillion in market value before bouncing back just as fast. To most traders, it felt like the market had glitched. To me, it felt like a warning. I was in my small office then, 3 monitors lit up with red candles cascading down like waterfalls. My system screamed alerts. My open trades were underwater within seconds. For a moment, I froze, not out of fear, but disbelief. How could the market move this violently, this fast? Then I realized it wasn't human. This was algo territory. Machines were trading against machines. Speed had become the new edge, and I was a human in a robot war. I watched friends panic sell, brokers shut down, stop losses trigger far below expected levels. People lost months, even years of profit in less than 10 minutes. But I didn't close my screen. I just sat there, breathing, watching, learning. That moment taught me something priceless. In chaos, your advantage is not speed, it's composure. Most traders think success is about predicting the next move. It's not. It's about staying functional when everyone else freezes. When the dust settled, I reviewed every tick of that crash. It wasn't random. It was a cascade. One large order triggered another. Liquidity vanished, and algorithms amplified the panic. It wasn't manipulation, it was fragility, a system too interconnected for its own good. From that day, I stopped asking, what will the market do next? Instead, I asked, what will traders do when it happens? That shift changed everything, because the market is never your enemy. Your reaction is. After the flash crash, I re-engineered my entire approach. I built a framework I still use today. The 3 anchors of calm. 1. Control exposure. Never risk more than you can analyze emotionally. If losing it will make you irrational, you're overleveraged. 2. Control time. Slow down when the market speeds up. Most traders die in fast markets because they chase.
The best trade during chaos is often no trade. 3. Control perspective. One candle doesn't define the market, just like one crash doesn't define your career. Zoom out. The chart always tells a calmer story. Those principles became my survival kit. Because every major collapse since 2015 SNB shock, 2020 COVID crash, 2022 FTX meltdown, tested them again and again. People ask me, how do you stay calm when you lose 6 figures in a single day? I tell them, you don't stay calm because you're strong. You stay calm because you've already seen the storm before. The flash crash broke a lot of traders. For me, it broke my illusions. It taught me the truth that no one wants to admit. You can't control the market, only your response to it. That's the real mark of a professional trader. Not profit, not prediction, but psychological precision. When I look back now, that day was less a disaster and more an awakening. The market didn't punish me, it trained me. Because it's not the crash that defines you. It's whether you freeze or adapt. And I adapted.
It was January 15th, 2015. A quiet Thursday morning until it wasn't. I remember sipping coffee, scanning my USD Euro and GBP USD setups, when suddenly every chart froze. For a few seconds, nothing moved. Then the screens exploded, candles stretching like lightning bolts, spreads widening to insane levels. The Swiss National Bank had just removed the EUR-CHF peg without warning. In less than a minute, the market imploded. Liquidity vanished, brokers went bankrupt, entire hedge funds disappeared overnight. The Swiss franc surged 30% in moments, an event that should have been statistically impossible. But it happened. I was long USD CHF. Heavily. I had believed the peg was safe. It was the Swiss National Bank. How could they just abandon a policy they defended for years? That's the thing about markets. Certainty is the most expensive illusion you can buy. When my stop loss slipped 300 pips below its level, my account was crushed. Not blown, but bleeding. Badly. I didn't move. I didn't scream. I just stared at the blinking numbers, realizing how fragile risk management can be when liquidity disappears. That day, I saw the real face of leverage. It wasn't just a tool, it was a loaded weapon. And I had been playing cowboy. Overconfidence is a silent killer. It creeps in when you start winning consistently, when your charts confirm your bias and your ego tells you you're smarter than the market. But the truth is brutal. The moment you think you've mastered it, you've already lost. I call that day my reset, because it didn't just reset my account, it reset my identity. For years, I thought being a trader meant being right. But after the SNB shock, I understood something deeper. A real trader isn't the one who predicts the market. It's the one who survives it. I stopped using high leverage. I stopped trusting guarantees. I started focusing on probabilities, not promises. I built redundancy into my system. Multiple brokers, smaller positions, and backup liquidity providers. But the most important change wasn't technical, it was psychological. I learned humility. The kind that doesn't come from reading books or watching YouTube gurus, but from losing something real. Pride, money, control, and rebuilding from it. There's a strange peace in humility. Because once you accept that you can lose at any time, you also stop fearing loss. You start focusing on process, not outcome. After that crash, I remember telling a student of mine, confidence is good, but humility keeps you alive.
It's ironic. The SNB shock was one of the most devastating moments of my career, yet it was also the most clarifying. It stripped away everything superficial and left me with the core truth of trading. Control is an illusion. Adaptation is survival. Humility is power. That day changed the way I teach, trade, and even think. It taught me that no matter how experienced you are, the market can always remind you, violently, that you're still a student. And maybe that's what keeps us in the game. Because when you stop learning, the market stops forgiving.
November 2022. The headlines hit like a thunderclap. FTX files for bankruptcy. At first I thought it was a rumor. Then the numbers rolled in. Billions gone. Withdrawals frozen. The so-called safest exchange in crypto collapsing in real time. I had seen crashes before. The flash crash, the SNB shock. But this was different. This wasn't a liquidity event. It was a trust event. FTX wasn't just another exchange. It was a symbol, a supposed pillar of professionalism in a chaotic market, endorsed by celebrities, backed by institutions, trusted by millions of retail traders who finally felt like they were part of something legitimate. And yet, behind that confidence was the oldest sin in finance, greed wrapped in genius. I still remember the sinking feeling as I watched traders panic on Twitter, Discord, Telegram. Their accounts locked, their savings vanished. The same pattern I'd seen in 2008, in 2010, in 2015. Repeating again, just wearing new clothes. For me, the FTX collapse wasn't shocking. It was inevitable. Because markets don't change. People do the same things in different cycles. The tools evolve. The scams get slicker. But human nature? It's constant. And once again, the small traders were the last to know. I didn't have funds stuck on FTX, not because I was smarter, but because I'd learned the rule long ago. Never confuse convenience with safety. I had seen too many too-big-to-fail stories end in ruins. But watching it unfold still hit hard, not financially, but philosophically. How do you rebuild in an environment where trust itself becomes the casualty? It reminded me of something I wrote years ago after the SNB shock. Markets don't kill traders, beliefs do. FTX was the perfect trap for belief. It made people feel safe. And in trading, the moment you feel completely safe, you're standing on a trapdoor. As the days passed, new revelations surfaced. The misuse of client funds, the political donations, the off-the-books loans. The scale of deception was staggering. But beneath the headlines, I saw something even more dangerous: disillusionment. Thousands of traders walked away from the market entirely. They didn't lose money, they lost faith. And when trust dies, markets lose their soul. That was my third great collapse. But unlike the previous two, I wasn't fighting to protect capital. I was fighting to protect conviction. Because without belief, no one trades, no one builds, no one dares. And that's the paradox of being a veteran trader. You must stay skeptical enough to protect yourself, yet hopeful enough to keep playing the game. FTX didn't destroy me. It reminded me that every system built by humans can fall like a house of cards. So instead of clinging to platforms, I doubled down on principles. Custody your own assets. Transparency over convenience. Principles over personalities. The market will always tempt you to outsource responsibility to a guru, a broker, an exchange. But true traders know the moment you give up responsibility, you also give up control. That's the real lesson of FTX. Not just about fraud, but about freedom. Because in trading, trust is not something you're given. It's something you verify
every single day.
When I look back across 15 years, through all three crashes, the 2008 meltdown, the flash crash of 2010, the SNB shock in 2015, and the FTX collapse in 2022, I see one unbroken thread. Every market failure was a human failure first. Every collapse began not with a chart pattern or a rate decision, but with emotion, greed, fear, arrogance, denial. And every survival story began with something far quieter: discipline, humility, and the ability to feel the fear but stay functional anyway. People often ask me, how did you survive 3 major crashes? The truth? I didn't survive them, I evolved through them. Each crash stripped away a layer of illusion. 2008 taught me that the system isn't built to protect the small trader. 2010 taught me that chaos doesn't destroy the disciplined. 2015 taught me that certainty is a trap. And 2022 taught me that trust is fragile and that self-responsibility is freedom. Those lessons didn't make me rich overnight. They made me resilient. There's a quiet kind of strength that comes from seeing everything collapse and realizing you're still standing. It's not pride, it's peace. Because once you've seen the worst the market can do, you stop being impressed by volatility. You start seeing opportunity where others only see fear. That's why, when I mentor young traders now, I don't talk about indicators or strategies first. I talk about emotional infrastructure. Because no system will save you if your mind is undisciplined. And no crash will destroy you if your mind is stable. Here's what I tell them. 1. Respect the market, but don't worship it. The market is not your God. It's a mirror. It reflects your discipline, your impatience, your greed. Trade with reverence, not obsession. 2. Protect your capital like it's oxygen. Because in this game, once you're out of breath, you're out of the game. Losing is fine. Losing the ability to keep playing is not. 3. Detach from the outcome. A trader's job isn't to win every trade. It's to make good decisions over time. Focus on process, not profit. 4. Embrace the pain. Every loss, every bad entry, every blown stop, they're tuition fees. The market is the most expensive university in the world, but it gives you the kind of education no MBA ever will. 5. Stay a student always. The moment you think you've mastered the market will remind you how little you know. After every crash, I rebuilt. Not the same way, but stronger, wiser, calmer. Because survival isn't about avoiding storms. It's about building a mindset that can sail through them. And when I look at where I am now, not rich beyond measure, but free, steady, and in control, I realize that was the goal all along. Not millions in the account, but mastery over myself. That's why the motto of my channel and the philosophy that's kept me alive through 15 years of chaos is simple. Master yourself, master the markets. Because when you've learned to stay calm in the middle of panic, patient in the middle of noise, and confident in the middle of collapse, you're no longer just trading, you're transcending.